Hello, my name is Raimo. I'm head of partnerships at E-Residency, and welcome to our webinar, which is focusing on crisis management during these very uncertain times. And this time we have PricewaterhouseCoopers helping us, and will give some overview and some tips and tricks how to run your company in this quite difficult situation, especially in terms of finances, running your company, dealing with your employees, and so on. Just a couple of things I'd like to mention. First of all, you are all welcome to ask the questions. Please do add your questions to Q&A session in the Zoom, not the chat. Then the second thing I would like to mention is that we are actually holding the whole series of different webinars. We already started them last week. You can see our recordings from E-Residency YouTube channel. For example, we had the webinars about how to set up remote work, how to change your business during the coronavirus, and many more to come. But now we are starting, and Indrek and Erki from PricewaterhouseCoopers Estonia are ready to start.
So, hello from our side as well, and thank you all for joining this webinar today. As Raimo told, we will give you some practical tips how to manage the companies in current situation, and how to maybe save some costs, and what are the government proposed measures today, and who are able to get the support from the government. So our first such a topic will be concentrate to the employment issues, and here we have like two different parts of measures what the employers could decide today, and how to reduce some costs related with salaries. So the most often used way these days is to decrease the salary, which is allowed under the Employment Contracts Act. And this is possible to do within 3 months on 12 months period. So it is very often asked the question if the employer maybe has such a period when they are do not know whether and how the company will survive, or what will be the workload, whether they can use this, for example, to reduce salaries in April, to have a normal working period in May, June, and maybe in July will be another such a difficult period. Then the answer is yes, it is possible to split that period. The main important thing is that it should be used in that case during 12 months period. Once this will be over, then there will start a new period if that necessary to use. But what are the criteria if and how this is can be used is that that this drop down of the work volume should be such a very extraordinary and unforeseeable circumstances like we have today. Nobody didn't expect that such a virus will influence workload and all economic so hard as it has been today. And yes, the other thing is that what the employer should evaluate and when this is allowed to do such a decrease of the salary is that this paying agreed wage is unreasonable burdensome to the employer. So there should be taken into account that this if the company has sufficient funds and it's well capitalized, in that case, this ground most likely cannot be used. But of course, there should be also. I need to mention that this when this decision will be made by the employer, then the employer must have such a view which also takes into account future scenarios. So maybe today the company is still good and running well, but if the funds in the company burns with very quickly, then there may be also ground to say that that this payment of the agreed salary is not justified, and the employer may just start this wage reduction process. From the point of process view, then the employer should notify of such 14 days in advance and give to the employees possibility to consult and make their proposals within 7 days. Usually, in practice, such consultation period is not very effective, or in real life, such consultations are not provided. But to follow the law correctly, then yes, the employer must offer to employees possibility to make their proposals. So if the company now wants to start the process of decrease of the salaries, then it can be affected only in mid-April if follow all the deadlines correctly. And of course, the employee has the right to refuse from the work in a proportion of the reduction of the wage. So that means if the employer wants, for example, to decrease salary 30%, then the employee may say that I will now work 30% less than it was agreed. And sure, if employee is not agree with such a reduction of the salary, then it is possible them to notify that they are not agree, and then they are able to terminate their employment contract by notifying 5 working days in advance. And in that case, they are entitled to get some additional compensation from unemployment insurance fund if they have worked more than 5 years in a company. But if the employment contract is terminated on that ground, then the employer has an obligation to pay 1 month salary as a compensation. So it's quite similar to layoff compensations, but the main difference is regarding this notification period, which is significantly less, and also the fact that in this case the initiative to terminate the employment contract comes from employee, not from employer. Why such ground is very important these days is that if the salary is reduced under this clause, then the employer may turn to unemployment insurance fund and get some compensation for the salary expenses from unemployment insurance fund. So there are several criteria when the employer has a right to get such a compensation from unemployment insurance fund. The first thing which should be noted is that this period is at the moment is open until the end of May, so it is possible to get the salary compensation for the salaries for March, April, and May, and it is possible to use that in a period 2 months in this 3 months period. So anyway, in that case, 1 month salary payment obligation in full remains to employer. And the compensation amount is 70% of the average salary, but not more than 1,000 euro in gross. And in addition to this gross salary, which is paid by the unemployment insurance fund, they are also covering all applicable taxes, like the social tax and unemployment insurance fund payments, and and the employer has an obligation to pay at least 150 euros by the company to the employee. How this not known yet, because unemployment insurance fund is working with this at the moment to make this process, but it should be ready at the beginning of April with all the details.
I have a question.
Yes, sure.
Do we understand correctly that all the same rules and the opportunities apply to e-residency companies as well until they are following all the rules and they have paid salaries before? It doesn't matter whether it's a local or e-resident Estonian company.
Mm-hmm. Yeah, that's a good question, and the answer is yes. There is no difference whether this is e-resident company or some other Estonian-based company. It is important that the employees are Estonian taxpayers and they have paid their unemployment insurance taxes in Estonia. So all the persons who are insured in Estonia, they can access to this grant. And it is also important to know that the unemployment insurance fund will not pay these amounts directly to the company, but they will pay this support directly to employees' bank account. So it's I think the most most important point why it is established such is that the employer will not going to use this support or these funds to finance its other obligations, but it's important that employees will get their salaries in such way. So and there are some such criteria which the company must meet to get access to this grant. There are three different criteria, and at least two of these three must be company met. The first criteria is that it's called such a 30% rule. And the first criteria is that the company's turnover has fallen 30% compared to the same month last year. So if the company wants salary support for the April, the compared period is last year, April. The second criteria is that the company cannot provide work for at least 30% of their employees. There is not meant that the company has terminated the employment contract with at least 30% of their employees, but here's meant that there is also a special ground in Employment Contracts Act where stated that once the employee is ready to work, but the employer cannot provide work, in that case, normal situation, the employer has an obligation to pay full salary, but under this clause, then the employer may ask support from unemployment insurance fund. And the third criteria is that employees' salaries have been reduced at least 30%. So these are have been reduced. Here is not mentioned, but I will that is additionally at least 30% of the employees, and at least 30% has been salary decreased. So that's yeah.
What about companies that are younger than 12 months?
That's a good question, and most likely they are not able to get such a support, because they compare under this first criteria, but still they can, if they meet the criteria 2 and 3, that they cannot provide work at least 30% of their employees, and they have reduced the salaries at least 30%, then in that case, I think they are able to get such a support. And also, it's important to know that only employees are entitled to this benefit, not management board members. Management board members may get such a support if they have, for example, also in addition to their management board member contract, employment contract, but that is not very usual in Estonia. And the paid compensation must be returned by the company in a situation when the company still cannot keep the employees and must them laid off within next month. So if the such exists, then the company has an obligation to return this paid compensation. what are the other ways to have such a very quick and effective wage cost saving is that as employment contract allows to agree any kind of agreements or make any kind of agreements, then it is possible to agree with the parties, employer and employee, that there will be some kind of period or even not limited period reduction of the wage. So what is the advantage of this is that there is no need to follow any kind of special process. It can be agreed starting from tomorrow, for example, and all kind of terms can be agreed. Also, it is possible to agree that the employee will stay home without salary and don't have any kind of obligation to work. This previous measure, what I was mentioning, in that case, the employer must at least keep employees' minimum salary. So it's 564, I guess it was, starting from this year. What is disadvantage of this mutual agreement is that if such agreed, the employer cannot turn to unemployment insurance fund to get the compensation, which was just now mentioned by me. So it has some effects like this very flexible process, but if the employer wants to some support paid by the government, in that case it's not the solution what really helps the employer. So these are such critical ways or such very often used ways to reduce the salary. I will give a very quick overview also about the process or such a permanent measures what the employer could think at least these days. And here I mean that such a permanent measure is termination of employment contracts. I know that many employers are thinking over this solution at the moment. I haven't seen that this is such a very common practice in a market at the moment, but there are a lot of companies who are thinking about this solution because nobody knows at the moment how this virus will how long it will last and what will be the life after when this will be over. And here is very important that once this measure is used by the employer must explain to employee the reasons of the termination of employment contract. I think these days it's quite easy and understandable for all what are the exact reasons that if the company does not have any work to offer or nobody's buying services from the company, then there is definitely a ground to terminate the employment contract under this clause. And if possible, employer should offer other work to employee, but Also, I think when this ground is used, then most likely there is not any kind of other work to provide. And if possible, yeah, the employer must also offer some kind of training and changes in the working condition, but yeah, it's more like theoretical these days. From the process, then depending of the period, how long the employee has been engaged with the company, there are several notification period times. If the employment relationship has last less than 1 year, then this is 15 calendar days notification, and if from 1 to 5 years, then 30 days notice period. And of course, if it is possible to terminate the employment contract even without following this notification period, but in that case, the employer must pay compensation for each day of short of notification. And there is also some restrictions to terminate the employment contract. It's not allowed to terminate the contract with a woman who is pregnant or has a right to maternity leave. It is possible if the company will terminate its activity in full. And also, if the employee has a child under 3 years old, then such employees have the right to keep their employment as preferred employees. And here is also what has to be kept in mind, that this is not the only clause which protects mothers of the child, but also fathers of the child. So it's very often is not followed correctly, that also fathers are protected under this clause. And yeah, the process of termination is that once the employer has made decision to terminate the contract, they should notify employees. It is not ask consent of the employee if the contract is terminated under this clause, because it is the employer decision to terminate the contract under this clause. And as mentioned, there has to be justified this termination of the contract, and here's not needed to give such a very detailed justification, just to mention basic facts why this termination is needed to do. And if the employee finds that this termination was not justified, or the process was not followed correctly, then they have a right to challenge this within 30 days as of when they get this termination notification. So not from the moment of the termination of the contract, but from the moment they got this notification. And the amount of the compensation is from by the employer, they have to pay 1 month salary as a compensation, and depending of the length of employment, then unemployment insurance fund may be obliged to pay some additional compensation, which can be up to 2 months salary of the employee. And also here is some information about collective termination. I think this may be not such a critical for e-residence companies at the moment. Maybe just this A and B could be such what you needed to be taken account and verify if the company is going to terminate employment contracts. Hopefully, e-residents do not have such a need, but still, if contract is terminated with 5 employees and the number of employees in a company in total is up to 90, then it's already going to the regulation under this collective termination. And what is difference between such a normal termination and collective termination is the process, because in case of collective termination, there are several additional obligations to consult with an unemployment insurance fund and give them additional explanations and information about measures what the employer has done to keep the positions and avoid the termination. But yeah, hopefully that is not the ground what the e-residence companies should take into account.
I would love to specify one thing. When the terminations take place and the company does not have resources or financials to pay the compensations, what is the process then?
Mm-hmm. In that case, this can be most likely a case of bankruptcy of the company, and in that case, unemployment insurance fund will cover this or it will take over the employer's obligation to pay compensation. So that's the regulation.
Okay.
And here I also put such a scheme how this collective termination works. It's has several steps, and with all this consultation and notifications, and yeah, here it is. And I will then give word to Erki now. And Erki will tell about government support measures.
Just one quick note in between the ones who started following us later. If you have any questions, please do add them to Q&A section in the Zoom so that we can ask them later.
Okay, so I'll take it over from here. So my name is Erki Mägi. I'm the head of the consulting unit at PwC Estonia. And I'd like to give a very brief introduction of what are the other measures the Estonian government has taken in order to try to mitigate the negative impacts on the Estonian companies coming from the coronavirus. So basically, where we currently stand is that the government has announced roughly €2 billion of measures. And part of those measures are government grants, meaning that they are kind of state aid given to the companies. Clearly, the biggest one we already heard about, presented by Indrek, which is the salary compensation to entities who have had to reduce the wages or have no work to give to the employees. But there are some other, and the others are falling roughly in two categories. So part of the measures are financial measures. So in addition to the unemployment insurance fund compensation for the wage, we also have a number of different loan and loan guarantee instruments that will help the companies to maintain the liquidity and hopefully be sufficient to get them through the rough times. And we also have, on the other side, we have a bunch of other measures that are not really directly monetary, but are also aimed to alleviate the negative impacts of the virus. So if we go to the financial measures, which are obviously of more importance, there are basically three large ones and then one relatively tiny one, but very sort of directly related to specific types of companies. The large ones, obviously, the first one was the wage compensation that was already covered. This can go up to 250 million. Then the second large one is given by KredEx Foundation. It is a Estonian government institution aimed to help companies to increase exports and to get the financing for the growth. And they have roughly 1.5 billion euros of various loan and loan guarantee measures. And then the third one is coming from the Rural Development Foundation, which is aimed specifically to agricultural, forestry, and kind of rural companies operating in the outskirts of Estonia. And the last bit is a relatively small amount, only 3 million. But this is now directly aimed to compensate for the costs of the cancelled cultural and sports events. I think it is worthwhile mentioning here that obviously most of the measures are very fresh. To only to some of them the exact terms are known, and for the others they are still in the making. But I think it's worthwhile for us to look into the financial measures and what are the exact terms and who can apply and how does that process look like. So if we proceed to the next slide, I'd like to start with the KredEx Foundation measures. In a nutshell, there are three types of help that the state of Estonia provides to the Estonian companies, and it doesn't matter whether it's a e-residency company or a standard sort of local company. It's exactly the same. And the measures provided are falling into three categories. First one, the biggest one, amounting to roughly 1 billion euros, is the loan guarantee. And the loan guarantee is aimed to help the companies to negotiate better terms with their current financiers. So the aim of the first tranche of that loan guarantee is to provide companies with an additional guarantee so that they can go to their banks and they can get a loan repayment schedule sort of change done in a way that you do get the payment holiday for more than 6 months, or if you have a bullet loan, you can extend the loan repayment term. And if we talk about this specific financial measure, then this obviously assumes you already have a loan taken from the bank or a leasing for that matter. It doesn't have to be a loan, and you do want to get the payment terms sort of flexed, but the bank does not allow to change the repayment terms without getting the additional guarantee. So if the bank requires a guarantee, this is an instrument you can use. The requirements to qualify for that loan are relatively straightforward. They have been set just over the weekend, so this is just straight out of the oven. And obviously, there can be some changes still in the go because this is really, really fresh. But if we quickly go through the requirements, so the first thing, as said, has to be an Estonian registered company. And as they put it, all required reports have to be submitted. I presume that that means tax reports and then the annual reports, which have been due already as of now. Is that none of the direct or indirect owners can be registered in the low tax rate territory. So it has to be a transparent structure of ownership. Secondly, the company cannot be insolvent, and it cannot be already in financial difficulty as of the year end 2019. So if your company was already in the financial difficulties with significant sort of negative equity or very, very hard negative working capital situation as at the year end, you probably don't qualify for that. If the problems started only now in 2020, you should be okay. You shouldn't have any overdue debts to tax authorities and credit institutions as at the 1st of January. And there is a specific list of activities and fields of activities that are not able to qualify for this loan guarantee. The list is relatively long, but the main examples I've pulled up here, the first two examples, agriculture and forestry, they are exceptions because there is a rural development agency who is taking care of those industries separately. But the other non-eligible fields are financial services, tobacco, gambling, real estate development, which is a relatively big one, and also all sorts of scientific work on genetically modified organisms. There are a couple of more, but these are the main. And one other thing that you have to keep in mind is that the guarantee or the loan guarantee can be taken for financial liability that has an interest rate below 8%. So if your current financing, be it a loan or leasing, is higher than 8%, it most likely doesn't qualify. And obviously, with the restructuring, the banks do usually revisit the interest rates, and if they want to increase the interest rate as a result of the restructuring to more than 1.5 times of the current interest rate, then again this scheme doesn't apply. In rough terms, the guarantee can cover up to 50% of the total amount. It can reach to up to 5 million euros per company or per let's say group of companies if you have more than one and they are related via the ownership. And there is also a maximum limit on the monetary side. In general, the loan guarantee shouldn't be 2 times more than the last year's personnel costs, but there can be exceptions, and these Kredex will take a look at separately. In terms of how much does it cost to get that guarantee, contract fee is usually zero because these things will be administered mostly by the banks and the leasing company. So in case you do want to apply for, or if you do want to change the repayment schedule and get some payment holidays from your banks, you will have to start discussion with the bank, and the bank will take care of all the sort of paperwork, and then there is no contract fee. However, there is a guarantee fee, which is for small and medium-sized companies, it's 1% per year out of the total guaranteed amount of the outstanding amount. And then for large companies, if it's more than 3 years long, the guarantee, then it's going up to 2%. But usually these guarantees are going to be sort of short-term, just to focus on the crisis. The second type of loan guarantee that the Kredex is currently offering, and the total budget for that was roughly €500 million, is for taking a new loan in order to sort of improve your liquidity and working capital position. The proceeds of the loan can be obviously used for working capital, but they cannot be used for refinancing. So you cannot take a new loan under the guaranteed credit scheme and just to repay your old one. You can make loan installments, so monthly repayments you can do with this new loan proceeds, but you cannot use it for the full repayment of the loan. And this one, if we are now talking about taking a new loan from the bank, this guarantee is higher. This guarantee can cover up to 90% for most of the companies, but in real estate and retail and wholesale sectors, there is a maximum cap of 60% that the Credex is willing to guarantee. Again, maximum amount 5 million, but there are also some specifics applying to the maximum amount. Talking about the fees, it's the same. So it doesn't matter whether you are trying to negotiate your current loan and to get a payment holiday there, or you are taking a new loan in order to repay some of the installments of the old one, then the guarantee fee is the same. It's 1% per year from the outstanding guarantee amount. Now, in case you are reaching out to your current financier, the bank or the leasing company, and they say that we are not willing to reschedule your loan. You have the ability to actually go to Credex directly and get a loan from Credex. Requirements are the same, so nothing really changes there. But it's just kind of a second tier of options. Clearly, the first one is talking to your bank and trying to get everything administered through the bank. But if that fails, then Credex is also providing loans on their own behalf. The main terms, again, the basics are the same as with the other as with the guarantee products. But this time, since we are now talking about a new loan taken directly from Credex, the loan terms can range anywhere between 6 to 7 to 2 months. You can get a payment holiday for first parts of the repayment schedule if needed. And in most cases, there is also a collateral requirement to get that loan. But if you don't really have any collateral to give, there is an option to use the personal guarantee of the founders or somebody else, but there are some max limits on that set. There are obviously again fees linked to that. The contract fee of signing that loan is 1% of the loan amount, and the interest rate is obviously linked to a specific project or a specific case and the risk. But roughly, you can assume that the interest rate starts from 4% if you have at least 50% of the collateral covered to give. But if you don't have any collateral and you're only working under the personal guarantee sort of collateral, you have to start thinking of the interest rate being 6% or slightly above. But at least it's a fast measure, and it does sort of create ability to get your working capital back in order.
And these I have a question.
Yes.
Sure. There are some of them already in our Q&A section as well about it, but in general, what about the companies that are younger than 1 year old? Also, for these measures, are they eligible or not at all?
Under the current best understanding, they are eligible, and the only thing is that, you know, as of last year, end of December, you should not have been in kind of financial difficulty or insolvency position as at that time. If that criteria is not sort of triggered, then it shouldn't be a kind of a no-go from that side.
And another one I would love to ask is about the liquidity loan. Do companies can ask the loan directly from Credex, or they definitely need to have proposals, yes or no answers, or unreasonable terms from the bank? So the question behind that there is that a lot of E-resident companies does not have traditional bank account, but they have fintech accounts. So what's the case with them?
That's a good question. Unfortunately, as of now, we don't have the exact details on how Kredex would sort of deal with this situation. I would assume that if you have some financing relationship with the local fintechs, if it's not just a payment account that you're using, but you are using some overdraft or at least some form of financing, I would assume that it already qualifies if you are asking from your fintech company to provide either a short-term working capital loan or increase in your overdraft facility. If they say no, I would assume that already applies, and you can go directly to the Kredex. But again, this is straight from the oven, so we don't really know how they would react.
So, but it's always preferred that they already have asked at least from one fintech or from one company the terms for the loan, right?
Yes. Because and then the main reason for that is that Kredex and the Estonian government is trying to put all the sort of the application, or at least most of the application, through the local commercial banks, because they have the infrastructure in place to actually process these applications, as opposed to Kredex, which is obviously struggling with the large inflow of the applications they are facing now.
Okay. Then the question, of course, raises when most of the big banks are not onboarding so many e-residents, then are they open to support them by giving loans to the Estonian companies which are run by e-residents?
I would say that most likely Kredex will accept kind of a no answer from the bank already in the stage of, I'm not going to even accept you as a client. So we're not even entering the loan discussion. So basically, with the Kredex working capital loan, the requirement is that it was not possible meaningfully to get a financing directly from the financier. And obviously, if they say that not going to onboard you, then that is a no, and that is a meaningful no. So I think you can go directly to Kredex right after that.
Thanks.
Okay, and actually there is a third very small amount that Kredex is also giving out, and this is up to 50 million euros in total. But this is for the companies who actually want to seize new opportunities. There are things that are changing in the landscape in the global economy currently, and it is a possibility to apply for an investment loan so that you can actually start producing something new. You can come up with a new business model, start producing something that some goods that are really in shortage nowadays. But as of today, we don't have the exact terms for those measures. So hopefully in the next 2 weeks they will be published as well. To wrap up from my side, in addition to the main financial measures given by Kredex, as I said, there is this Rural Development Foundation that is planning to give out roughly 200 million of loans and guarantees as well. The structure is expected to be pretty much the same, so they can guarantee the loan or they can give new loans, but this is directly to forestry and agricultural and regional sort of companies. What else of maybe of interest? The state is currently planning to suspend second pillar pension fund payments. It's not decided, but it's relatively highly likely that this is going to happen quite soon. In case your employees are having a sick leave, then you might want to know that previously, for the first 3 days when employees got sick, it was basically on their behalf, so they didn't get compensated for the first 3 days. Now the state is paying for the first 3 days of sick leave as well. And the last one, maybe just worth highlighting, being time, is suspension of tax in arrears interest. So whenever you are in arrears of your tax payments to the tax authorities for the period up until the end of May, now tax authorities do not take any interest on that, so you can just as of now, you can just leave the tax unpaid and not worry about the interest being accrued. Obviously, that is only up until the end of May. And in case you have larger sort of tax debts already accrued, you can negotiate them into a payment schedule, and you can get a kind of a cheaper interest on that one. But I hope that's not the case necessary as of now. So maybe let's open the floor for questions, because that's probably the most efficient way of going forward.
Let's see, what are the questions? Like we already asked, Credx measures are suitable for e-resident companies as well, and we covered also the fintech part. The question, taken into consideration the current situation and the economic impact, if we talk about extraordinary termination and parting ways of mutual consent, which one would be more beneficial for employee?
For employee, definitely will be more
You're
beneficial.
on mute, Indrek. Oh, now I can hear. Sorry.
Yeah. For the employees' view, definitely more suitable or more beneficial will be termination under this redundancy clause, or if the employee is good to negotiate its termination terms, then of course this mutual agreement could be also a solution. But I think that the first one is more suitable or more beneficial.
Mm-hmm. Then I have one more question to Erki about taxes. It's possible to negotiate the payment schedule as well as no interest for a certain period. But what about tax declarations? Are they going on the regular basis, or what are the rules there?
Yes, yes. The current rule is that you do have to submit all the tax declarations. There is no levy there, but as said, you don't have to pay. You know, as of now, you can delay the payment without facing interest penalties on that for the couple of next months. But you do have to submit all the declarations that are necessary.
Mm-hmm. Interesting question. Can you discuss a bit about contractors, subcontractors versus employees, and what company owners should be aware of?
Yes, that's can be a different topic, which we can talk one more hour. But in general, for the contractors, these measures that were described earlier are not applied, because these are only measures that the employees can take part. So if that was the aim of this question, because the contractor is just the ordinary partner for the company in a light of this regulation, and not considered as an employee or anyone who can be supported under this regulation.
One more thing I would love to clarify is that the whole documentation and the guidelines and everything, for example, for reducing the wage or termination the contracts, are they available in English, and where one should search for the documents and formulas and everything?
Actually, I cannot recommend any such website or where these documents can be downloaded, because I still think that each case is quite different, and there is not such a very good model to provide. But just in short, these notifications, if they have if there is justified why this reduction or termination is made, and what will be all the deadlines of this process, whether this is temporary or permanent, whether if this will be termination of the contract, and when this contract will be terminated, then I think it's already a good start. But yes, I think still that each case is very different, and to recommend a model for that is not a very good idea.
But to clarify, in order to get the support from unemployment fund, there are going to be a certain processes and criterias and forms for that.
Yes, most likely there will be, and as much as we have information from unemployment insurance fund, they should be ready at the beginning of April. And the aim is that they will start make first compensation payments somewhere around 15th of April.
Then there is one more question: where I can get more information for investment loans supporting new technologies, like online biofeedback sessions for single users and groups. So basically the question is about the investment loans.
Currently, unfortunately, the only piece of information we have is roughly 10 days old, and that comes from the government initial sort of introduction of the package of measures, which was at the level of there is going to be a 50 million euro loan buffer put aside for the investment loan. Other than that, we don't have any information as of now. Clearly, since the working capital and the loan guarantee side was more critical in terms of time, they started from that side. They got now these terms fixed over the weekend. So I would assume that in the next week or a couple of weeks, the investment loan terms will also become available, and then they will be published on Credex's homepage. Unfortunately, most likely it's going to be only in Estonian, just as it currently is with these terms and fact sheets. However, if you go to a Credex homepage, on the very top there is this Corona kind of link, which is currently only in Estonian. But if you use Google Translate, I would say that it kind of gives you the rough picture of the terms and conditions and requirements we talked today. But also, as soon as they have something published on the investment loan, it will show up on that page as well. Initially, at least, definitely in Estonian. But again, you get the initial picture just by Google translating it.
And are you aware of any funding options that are EU-wide, for example, for new technologies?
Not as of now when it comes to like exact terms. I'm pretty sure there will be, and it can easily be that there is already something available, but we haven't had sort of contact with that side of the business yet.
Okay, I think we have covered the questions here. There is one more about the case where one has e-residency card that is expired. If you have a specific question, please do write to our support. But in general, if your e-residency card has expired, unfortunately, you have to go through the application round again. Extending already expired cards is not possible currently. And the last question for you guys is, if we take a business perspective for the whole situation here, what would be your main suggestions for small companies? Most of the e-resident companies are small companies. What to do at the moment to manage the finances and lower the risks as much as possible? What do you suggest where to start, or what are probably the most effective measures for them?
I can take that, and then if Indrek wants to add, you can comment. I think the very, very critical point is getting a full picture of the current situation when it comes to cash flow. Look at the cost side of what is your expected outflow for the next 6 months at least, be it I don't know, contractual cash flows from rentals, from salaries, from whatever fixed cost you have, and play with the scenarios of your business continues as usual, which is highly unlikely, and then apply scenarios of a 30% cut, 50% cut, 70% cut, and then you get at least some kind of a view of where and when you are running into a cash flow problem. And then you have to start sort of putting countermeasures in place relatively fast. The best guess as of now is that it's not going to be a 1 or 2 month standstill for the economy. It will have definitely longer impacts. We don't know how long. Maybe the economy is back on track in 6 months, but it may well take much more time than that. So you have to be prepared for a bit longer downturn for sure.
And I can add that from employment perspective, I recommend you, if there are some problems or some things to concentrate or take into account, talk with the employees and try to find some kind of solution, because it's obviously clear for everyone that some kind of measures should be taken, and most of employees currently are very cooperative, and I think there is possible at this moment to find a solution for any kind of situations.
Okay, thank you. Thanks a lot for bringing this information for us and for all the e-residents. One more thing I could suggest is that if you are facing difficulties in paying for your services, or you are just needing some help, then we always recommend to turn to your service provider before you can see that bigger problems are starting to become, so that service providers can help you. You can negotiate and agree some better terms, or some you can change your packages in the service provider's service or something like this. Just be as open as possible with communicating with them. So thank you very much. That's all for now. This recording will be up in our YouTube profile as well in next few days. Thank you.
Thank you.
Thank you.